Good morning. If you're here, it is the day after NVIDIA earnings. What do I care about the date? It's Thursday, February 22nd. We don't care about the date. Let me turn on Do Not Disturb. I hope people have phone service. I'm going to put on Do Not Disturb. And then I've got to get all set up. I'm not. Did you buy BLDR? Morning, Joe. Morning, Nevin. Okay, I don't care about that one. Let us... Oh. Good morning, Zephin. Good morning, Chris. Let's just say Tom Lee was right. I literally have zero notes. I have NVIDIA earnings, I have BLDR earnings, I have SMCI reaction, and I have Rivian earnings. If there's anything else that somebody wants me to add in, let me know. But I'm just going down trending news on here. NASDAQ futures as NVIDIA comes through. I think this is a good article. We'll look at that one. I've got an article. So, John, and I'll go about it a little bit more. But BLD, I think I outlined it well in the note to the Savvy Trader folks. It made sense. The valuation wasn't overvalued. They had reduced their expectations. Year over year was going to be an issue because they were so good last year. But Rivian's just an effing mess. So here's the thing. When you're valued as a growth stock, you need to grow. And when you forecast, when you produce in 2023 58,000 vehicles, and you forecast in 2024 that you will only build 58,000 vehicles, your stock cannot be valued as a growth stock. It goes back to value. It goes back to, you know what? Well, let's see what happens. So, yeah, and that's the key on Chris is, and you know it, you're a good enough trader, is if you're going to put money in there, A, you don't need the money. It's not a position that you're going to ever need to sell. And B, you're in it for the long haul. It could go, Rivian isn't going to zero. They have too much cash. It's not going to zero. Could it be a dollar stock? Yes. But it's not going to zero. We're going to do. This is, I can hear myself echoing because Maya money. Maya, by the way, and I will release this in the newsletter. I will release so Maya has known me, I think, a year now, and I do geek out on stocks. So even in my personal life, she has to listen to. She gets to hear the podcast for 15 hours a day. Just so you know, and I'm. It's no different when I'm off, but this is just me. But she is up since she started her Webull account, 51%, and she sent me a thank you, G Money. I'll include it in the newsletter. Why not? I want to do this. Builders first source rises in earnings. There we go. We're going to include that one. Morning, Daniel. Yeah, Lucid was. I should put Lucid in there too. LCID. Rivian is the valuation of Rivian. Everybody, if you tuned into this podcast and you don't know that Rivian's valuation is absolutely ridiculous. I think Dan Nathanson yesterday was because he picked Rivian this year in his acronym. And oh god, Dean Phillips is on CNBC. I really want to see that, but he picked it, and he was suggesting that Rivian is in a better place than Tesla because their valuation is less. No, Tesla has more than freaking cars, Dan. That's the issue. Dan just doesn't get it. Dan's just a moron. And if you tuned into CNBC after the NVIDIA earnings yesterday, I need to talk about that. What was it? The On the Tape podcast hosts, Dan Nathanson, Guy Adami, and what's the other guy? Podcast hosts, Danny Moses. And Danny Moses. Morning, Larry. Tesla and Rivian. Yeah, and same thing down here in Atlanta. It's Tesla, Rivian, although we do have a number of Ioniqs, Ford Mustangs, and Lightnings, and Polestars. Polestars are kind of a very, very reduced one. But, yeah, okay. Let's go back. We've got BLDR. BLDR is up 6%. I think I got in at 183. Hold on. I'll tell you what I got in at. Why am I guessing? I can't remember crap. All that's sticking out in my head, by the way, is the $46,000 that I sent to Tesla in a wire right now that I just got alerted. If you didn't know, yes, I bought a car. Yupper bought a new Model Y. Let's see. BLDR. I bought 60 shares at 183.88. So almost at the day's high. And if we look at one day yesterday, I did what you absolutely do not want to do, which was buy right here. 183.88 was, I think, at about 2 o'clock I got home. It must have been here, right here. So I bought into this chop. See how it's nicely chopped between 183 and 184? I put in the order for 183.55, and it immediately dropped down to 182. So I am not immune to the, oh my God, I just bought this and it's down 3-4%. I did not drive it home, Mark. It's one that I'll kind of, okay. I'm not going to do this on the podcast because nobody cares about the podcast stuff. So you guys are the OGs. Let me go in and I got to go to YouTube and monetize this. I'll tell this story in a second. It's a good story. And I tell you what, I'm so bullish on Tesla based on this experience. I mean, they do shit so right. I mean, they really, really do. Okay, we're going to monetize this on save. And then videos. This video is performing horribly from yesterday. Past 2 days, just maybe it's the thumbnail, the title, I don't know. Maybe people are sick of SMCI. So I walked in and I told Maya when I was walking and said, I'm not buying a car today. Don't worry about it. I'm not buying a car. And we took the Model Y with the 19-inch tires for a test drive. I liked it, didn't love it, but I said, with the value of it, maybe I'll get it. They didn't, and he said he didn't have any cars with 20-inch on the lot. I wanted a white color, but all they had was stealth gray. But I wanted a white interior. I love the white interior. So we wound up going back to the inventory list, and he had mistakenly checked 7-seat option. So we looked. He had one car that was stealth gray with a white interior, 5-seat configuration with 20-inch tires. But I couldn't take it for a test drive because it had just arrived on the lot. It had 4 miles. So I said, well, what's the deal on that one? And he said, well, I can give you the inventory discount, the $1,000 discount, blah, blah, blah. And so it came out to be $46,000 out the door, $46,000. After everything's said and done, $46,000. And he said, and I said, well, I want to transfer my full self-driving from my current car to the other car because that saves $15,000. And he said, well, we're giving you $17,000 for your car. And I said, that's kind of shitty. And he's like, yeah, here's the deal. Go and see what you can get for it at Carvana. I said, but I want to transfer my full self-driving. He goes, you don't need to. You just need to transfer the full self-driving, while you own the car. So 2 days after you transfer the full self-driving, sell it to Carvana. Carvana offered me $22,000 for the car. So, yes, white. My current car has white interior, 2 dogs, and Chris, if you've got a dog, I suggest getting a hammock from Amazon that hangs off of the headrests because the dogs stay in the hammock. So, Palo Alto is great. Just buy it. And no, I got the Tesla I'm picking it up tomorrow. So I got if I had gotten the white car instead of paying 46, I think it was going to be about 55, 54, somewhere in that neighborhood. So I'll deal with the stealth gray color on the outside. May get it wrapped in a stealth white. If I can get a wrap for, a couple $1,000, maybe I'll just do that. Yeah, if you have 90-pound Goldens, I would not get a white interior no matter what. But my dogs stay in the back seat, Chris. Chris, remember, I am extremely neat. I'm very thin, and I have 2 small dogs. So I am. I should be not have a girlfriend, but I do. Let me see. Live. There we go. Okay. Ooh, daddy got paid. Yeah. Listen, I paid $65 for my Model 3 in 2018. So I've got, yeah. Okay. I got to go back and look at some stuff because I do need to. NASDAQ futures soar. I think I've got that one. Yeah, I've got this article's already in there. Jobs can unexpectedly fall in the past week. The job market is getting better. Holy crap. That should probably make the damn stock market fly. Yeah, fuck. Stock market's going to fly. The day, jobs. Kidding. But they were good. SoundHound's up 8%. Wow. That's getting some love. Oh, I do have to report this. Okay. And then we're going to do Rivian. And then we'll do Lucid. Oh, this is a good one. Biggest stock move is the day. Because that includes everything. Because I'm not going to... what's this one? Oh, we're going to move this up here. We're going to move that up there. And NVIDIA, let's see what the good article on NVIDIA is. I don't like to throw in a bunch of articles. Yeah, this is a good, it hits a tipping point. I mean, I think we're still at, listen, Tom Lee was right. Was right. Okay. You didn't chicken out, Pavan. If you got a gain, it's a gain. I sold my SMCI below where it is now. I sold NVIDIA well below where it is right now. You took profits. I did not finance my Tesla. I do not see anything. I did not see the reason to pay 6% interest. Yes, I could make probably 10% in a year and beat it out, but I got the money. Let's just say SMCI paid for that Tesla easily paid for that Tesla. So this is how you do it. And if I can give you any tips on money, finances, how you get to be retired at 49 years old, do not buy something unless you make the money to buy it. Don't buy on financing. If the only thing I've ever financed, there's two things I've financed in my life. Houses, because you need a mortgage, and mortgages come with some tax benefits to them as well, because you get to pay right off the interest that you pay. And then the second thing that I financed are cars, but I've only financed 2 cars in my life. 3 cars. The first one was when I first bought a brand new car at Honda. I bought a Honda Accord way back in like 2000, I think. I financed that through Honda, but I got 48 months, 0%, and I paid it off within those 48 months, so I got 0% financing. Second one I got through Bank of America. I financed my Lexus in 2012. That was after my Honda, 12 years in the Honda, 2012 Lexus. I financed that one through Bank of America. It had a 3 or a 4%, but I only got 6 months of 0%, and then it went up to 3 or 4%. But I paid that off after the 0%, kind of knowing that. Then third car I bought was the Tesla in 2018. Gave up the 2012 Lexus, and I bought that 2018 Model 3, and I got a 1.9% 5-year loan that I had to pay off in order to refinance my house mortgage. So I paid off that car, and this time at 6.5% without any incentives to finance, no reason to finance. Yeah, BLDR play got a nice, yeah. Yeah, if you want to retire, house debt is not bad debt. You just got to, by the way, let me see. I want to take a victory lap on this, I commented on this one. This dude, Dividend Fisher, I wish I could take a victory lap and just say F you to all the people who, when I said, hey, I'm out, but I'm planning on getting back in because the company is valued, and they started yelling at me, company valued efficiently? Are you crazy? It's overvalued. Look at the PE. And I said, the forward PE is what you want to look at. This company is growing. We're in the beginning sessions of AI. And they said it will never get back to 800. Well, where's it at today? In pre-market, let's see, 850, 870, 818. So I'll buy it at in the 700s again. It'll get down to 700s today. Let me see. Yeah. This is a good article. Okay, $1,300 price target. Let's see. Does FinViz have SMCI? There we go. No, they don't have the 1,300. I'll buy SMCI again. But this article right here. $1,300 from $700. Supermicro said that using its application optimizer servers with NVIDIA GPUs makes it easier to fine-tune pre-trained models and AI interfaces. The Supermicro Hyper-E server, based on the dual 5th generation, this makes no sense, can support up to 3 NVIDIA H100 Tensor GPUs, delivering unparalleled performance for edge AI, said the CEO, Charles Lang. Rosenblatt said the key for investors to consider that the company is benefiting not only from secular AI growth, but material share gains. They expect these gains to reach double digits in the next couple of years, up from single to mid digits with particular focus on the enterprise. So this is a great article. Okay. That's a good Apple news. Hold on. Dog is crying. Okay, come on. Come here. Come on. Hey. Hey. Come on. No. Get over here. You can completely get under there. There's no reason to cry. None. Yeah, I think paying financing for a car is... Listen, there are some people who, if you're a construction worker, if you own a company, if you're a real estate agent, it totally makes sense to finance a car because all that stuff's written off. If you're a stock trader, my dad, you guys will laugh. My dad last night, he's like, why don't you form a corporation and write the financing off? And I said, no, I'm not about doing tax fraud. Should I include this? I need water. Okay, I think I'm going to just start. We got to do some scans. Holy crap, it's 9:10. Let's do some scans here. I almost forgot to do scans. We'll go down here. It's not a jam-packed show, but I am going to expand on stuff. Core investments. Nope, nothing. Nope. We're going to go and look at brokerage holdings. Nothing. Covered call ETFs. Devo. Energy names. SCO. Wow. Shell, COP, ARLP. Levered ETFs. Let's see. Did we get TQQ and stuff? All on the short side. Earnings. Levered ETFs, low cost Vanguard. We don't have anything there. There was a cut in production for Boyle, and that's why it soared yesterday. I forget which company cut production, but that's essentially what it was. Marriott, Home Depot, Thermo Fisher. I can look at it after I'm done with these scans. There we go. Let's look at the Dow, which Amazon will head into. Home Depot, I have Procter & Gamble. Let's see. NASDAQ. CMCSA, CTSH, CSGP, and Marriott. And let's look at S&P 100. There we go. And we'll scan this. You better not cry. I know she's going to freaking cry. I know she's going to fry. CG, there we go. Let's go to strategy tester. Oh, and she's crying. Okay, stop. Come on. Hey, there. Come on, Penny. Okay, there you go. You both peed and pooped. I had a tree. Ooh, new feature available. Run multiple strategies on multiple assets. Ooh, that's AI. Ooh, I'm going to have to try that. Ooh-wee. Jim Cramer's on the air going, I told you. Boyle, it's down 5% today. My assumption, and again, this is just an assumption. I'm not a commodities expert. Please don't take me for a commodities expert. I've traded these in the past. You had that big run up based on production cuts. I don't think this would be a play. Zevin, here's my take on Boyle. You've got significantly better opportunities in the market than to play natural gas. Natural gas is just something that we've got too much supply. It ran up yesterday because the producers are cutting supply, but they're not going to be able to cut fast enough. So the problem is, you just can't play something else. Because remember, Boyle isn't something that you buy and hold. You want to trade that one. Let's see. ACMR. Let me look at. I'm not going to go into Apple. Even though I still think that Apple is the best opportunity out there. I'm not selling it. I think it's going to trade between 180 and 190. It's a semiconductor. It's ranked number 1 out of 29. John, I don't think this is a bad one. It's just my only problem is that, you're trading at 19. Your 52-week range is up to 22. Why is a company that's in semiconductors? It's kind of like Intel. It should be at its 52-week high based on just what you're seeing from a cyclical standpoint. PE forward 13, not bad at all. I mean, it's got everything except for profitability, a D+. And the asset turnover ratio analyzes how well a company uses its assets to drive sales. The value is calculated as the total revenues for the trailing 12 months divided by the average total assets. So it's a D+, leveraged free cash flow. A company's profitability as it exhibits the amount of cash a business has after it's met. That's where I think you're getting, in gross profit margin. This is 50% is not bad, but FYI, NVIDIA just had 70%. So you look at that one versus an NVIDIA, look at that, 69% margins. So it's overvalued, but which one would you rather have? If we just look at NVIDIA versus select symbols, ACMR. We're going to get rid of that. Update chart. And then I guess we'll just do, let's look at 5 days. NVIDIA is down 7%. So ACMR down 12% over 1 month. You had that big fall of NVIDIA, but ACMR has had that huge fall. So I think it just depends. How do I put this? I'm not a guy who looks for the second place company and to invest for them to come back. I look to the leader in an industry and look for them to grow. And if the second place is ready to come back and grow more, then I'm all for it. But I'm not out there chasing. It's kind of like, small caps versus big caps. I don't chase the small cap stuff, even though you can make money doing small caps. I just don't know enough about it. So I try and, do the big cap stuff. But is Q up 3% yet? 2%. Yeah, because he moved it. That's why he moved to Miami, so he could sell it and tax free. But I don't think it's a shock. I think he's selling Amazon not for anything more to fund Blue Origin and do lifestyle stuff. I don't think he's selling it because he doesn't think that it's going to grow. I think he's just selling it because, the guy's older, wants his fortune, takes a bunch of, I don't know, let's see. We'll look at this. Oh, I don't like pop-ups. Since November, I guess he started in big chunks. So, that's $1 billion a day. 1 billion, 1 billion, 1 billion, 1 billion. The guy still holds plenty, but February 8th, 7th, 8th, 12th, 9th, 14th, 20th, 16th. We're going to do date. Why can't I sort by date? I guess I can't. I don't think you have anything to worry about in Amazon. We're on QQQ. We're about to, it's 9:18. Yeah, I'm never going to say it's bad. I've just, when I tell you guys, hey, it's not exciting to me, please don't take that as you shouldn't be in it. You should be out of it. There's nothing, there's something wrong with it. It's just more of a situation. Am I getting into it? No. This is ironic. Q's got you out yesterday in the algo. It's going to get you right back in. Maybe not right away because the MACD has to cross up, but okay. Let's open up some of the This is an interesting list that I found, by the way, last night. If you want to look at rebounds. We're going to go over here. What are today's earnings? That's what I want to look at. I don't think that there's much. Oh, Intuit reports and Melly reports. Yeah, Intuit earnings today. Let's go and Intuit and Melly. We'll take a look at those charts and see if there's opportunity before the bell tomorrow. Warner Brothers before the bell tomorrow. That could be an interesting one. I think that's a losing game, but Lamar Outdoor Advertising, that is. Coca-Cola Euro Pacific. There's nothing super exciting in there. Square, I'll put Square in there too. Okay. Vail could be interesting if they announce some type of deal. It's an energy company, I think. And they're all about energy. Booking Holdings, I'm not a huge follower of, so I'll kind of keep that out, okay? What is this? What's new? Oh. Display average cost on symbol chart, improved AI summaries rendered as markdowns for creators, new copy direct link to portfolio and apply coupon feature. Oh, there is a coupon feature. If you want to follow, let me see. Oh, I don't want to show my creator stuff because I don't want to show how many people are following me here. And specifically, I think it shows their name. So I have given up top spot for the week. I should gain it for 1 week because I do have heavy. Let me see. I've given up the 1 month top spot to Trade Think Tank, who has 470 trades. I have 11 trades over 1 month. You're following a guy who's doing 470 trades. Good luck in following that. 3 month, I am second place. So I've given up top spot to Tech and Crypto. Year to date, I think I'm still top. Yes, 34%. So, yeah, TrendSpider is awesome. I really do like TrendSpider. But let's go over here and let's go look at my portfolios because I did put. This is the allocation. I have a ton of cash. And we'll look at gainers. Because SMCI is still my top gainer. Uber, second. Meta. BLDR is up. I mean, it's 0.9%. I'm losing on IONQ, losing on Pins, losing on Mara, losing on PayPal, losing on DocU. Oh, God, DocU's at 50. Oh, I got to get rid of that. That's just, I'll sell that for a loss, for $1,000 loss. I'll throw it into something else. You know what? Maybe I'll buy SMCI or NVIDIA today, just with that little amount that I've gotten there. Pavan, here's the thing you have to know about the Nobel Peace Prize. There's a nominating process. Trump got nominated for it. I mean, I think Vladimir Putin 1 year got nominated for it. Doesn't mean they get it. They're just nominated. So you can get a nomination from anybody. So it was bound to happen. But I'm not a guy who thinks that I was talking about it with my Tesla buddy yesterday. Not at the Tesla thing, but my buddy who works at Tesla. He has stopped his employee stock purchase. And he said, I don't believe in what, I don't disbelieve or believe in what Musk is doing. I just don't, it doesn't matter. But it's taking so much focus away from Tesla that they have their eye off the prize. I mean, right now, Cybertrucks are coming off the line with some defects, let's just say. They haven't given guidance. He's in the middle of moving the company from Delaware to Texas, which I think is a smart move after that. But he's alienated so many people from the left and the right that, I mean, it makes no sense. So, okay, I'm going to go over this. Okay. Let me start recording. Good morning. It is Thursday, February 22nd. In the big news of the day, the huge news of the day, initial jobless claims unexpectedly fell in the last week. Psych. That's helping. But the big news of the day, it's NVIDIA. It is the earnings came out. Tom Lee was right. Blew it away. It's up 13% in pre-market. SMCI is up like 9%, taking the market with it. The Qs are up 2%. S&P's up like 1.34. It's just, I mean, again, it's taking the market. Now, if you were watching CNBC yesterday, then you saw the guys from the On the Tape podcast, Dan Nathanson, Guy Adami, and Danny Moses were all on there. And when the stock first opened up after it was trading, it went down to 650, 670, somewhere in that neighborhood. It was down a good amount. And then they started going through the earnings, and AI started going through it, and they started understanding exactly about it, and it started to creep up. Well, these three mofos who have called the last 15 of 2 recessions said, I wouldn't buy it here. Who has these guys as their fund managers? Who has hired these guys as the people to manage their money? Because there's no way I want a fund manager or somebody managing my money who's not in AI. And these guys, they don't invest in Tesla during the entire Tesla run. These guys don't invest in NVIDIA during the entire NVIDIA run. They don't invest in the Magnificent Seven during during the great run. Meta, Netflix. I mean, I can go on and on with great runs that these guys consistently hammer down. So my point on this rant is to listen to people, take in the information, but do your own research and understand momentum is a strong factor. And for the last 3 earnings, NVIDIA, we'll go over the chart in a second, but for the last 3 earnings, NVIDIA has topped estimates by 10%. That is enormous. When you can beat by 10%, and they said that we don't see an end to this demand. Where's the mic? Because I'm dropping it. That's it. That's all you need to know. Now, am I buying it today? We'll go over this. I have a 3-day rule. You need to let it settle in. We'll look at what the reaction was the past few times. But I wanted to bring that up. First thing I want to bring up is the Qs were up 2%. I said this market was dependent on the NVIDIA earnings. It's clear. We have just had the little pullback. You had a nice 3% gain in the Qs. The algorithm got you out. The 4-hour algorithm got you out yesterday afternoon with a 3% gain. We are going to open up at 432. You know where 432 points at? It's a gap up. So right there, your 425, which is where you closed, which was, let's see, yesterday's high in the afternoon was 425.70. That now becomes your support level. So as we continue up, that 425 becomes your support level. If we pull this back to the October lows, this volume shelf right here. And we pull this back to the October lows where we were, where we got in at 353 on the Qs, November 1st. You can see there's a nice little volume shelf here at 425. So if you break down to that, look where you go. The last support level, which was 408. So old resistance becomes new support. You can see right here, there's a clear line. If you just draw it here from January 24th over, you touch 3. That's a clear line at about 430. So old resistance becomes new support. You bounced up there on it. You bounced up here. You broke through it. Great. You came to here. It became support. Well, you came here. This is the line to be at $430 on the Qs. We're opened up now. The market. I was just ranting on YouTube Live. So the Qs, interesting chart. Want to keep an eye on it. If you haven't bought the Qs, I would still wait. I wouldn't necessarily get them up. Yesterday, I did make a move. I bought BLDR, and they're up today about, I think, a little bit, about 10% or so. We'll go over that one. We'll go over the SMCI, how SMCI is reacting. We'll go over Rivian. We'll go over Lucid. I'm going to go into these in depth. We've got earnings today from Intuit, Melly, and Square. And then I've got my social requests and then some scans. I will foreshadow to you the scans mean absolutely nothing. There are other stocks other than the scans that are bullish in this market. This is my Savvy Trade. This savvytrader.com/daily stock pick. I have 2 portfolios. This is my trading portfolio. This is the number 1 portfolio as far as results for the year here in Savvy Trader. So it's $25 a month if you want to follow me. Basically, when I do a trade, whether it's buy or sell, I put it in this trading portfolio. It's managed significantly differently than my core, than my actual portfolio. But it is a trading portfolio. It has significant returns. I kind of show you, hey, I know what I'm doing. That's where you pay the $25 a month. If you want, go over there and subscribe. The core portfolio over here on Savvy Trade, this is what you want to. Basically, these are 34 positions, and they're 34 stocks that are set up to provide you a decent stock opportunity. If you're new to stocks, this is where you go. And you just follow me on Savvy Trader. Any of these links, by the way, the links that the sign is down below. Linktree, linktr.ee/daily stock pick. It has all the links for you to follow. So I'll just tell you, Savvy Trader, great platform. I outlined my trades. Now let's go into this. NASDAQ futures surge, S&P Dow futures up as NVIDIA comes through. NASDAQ futures were up 2.1%. They're up 1.96. They're pulling back a little bit. NVIDIA up 13%. It just took everything. Rates advanced 1 basis point. Initial jobless claims unexpectedly fell. We talked about that one. That's it. So, NVIDIA shocks Wall Street as generative AI hits the tipping point. This is just the beginning of this. So let's go and let's look at the chart of NVIDIA. We'll go and look at some of the fundamentals of NVIDIA. But how did NVIDIA react? It's up 11% right now at 753. We're going to get a gap up. Well, how did it react last time when it blew earnings away? This is the chart that I posted in the newsletter yesterday. And the newsletters are absolutely free. During the week, the newsletters are absolutely free. And I put this in there for you to see. How did it react the last time it blew? When it really started blowing earnings out, it was this quarter, May of last year, and it blew unexpectedly. This created a gap from 307 to 360. And I said during this time, if we revisit that gap, you will see it go down. If we don't, we're off to the races. And we were off to the races. This was the beginning of the AI train for NVIDIA, okay? The next time, they blew it away. Look at that, $1.09 per share to $2.70 per share. Blew it away. How did it react? It gapped up a little bit, not much. It came back to its closing price, came back down, 457. You saw it take off a little bit there, but then it retreated, and that's this highlighted box. It retreated. Let's see, that was August 23rd. It took 7 days for it to retreat. This was a market retreat, okay? This was nothing more than a market retreat. It retested and it came down. And then it went through. The next earnings, here's the October low. This next earnings was their creme de la creme of earnings. How did it react? Well, it ran up, obviously, to this point. It came back down. and then you saw it flatten out. It's just creating new levels. So I totally expect between now and the next earnings, you will see this stock come back into the low 720s, I would say. I would say probably about 720 would be your bottom. I'm not buying it today. I still hold my position. I am waiting for this one to show. If we have a gap, then we play it like back here where it gapped up. If it gaps up and then it comes back into the gap, you can expect it to fill that gap. If it doesn't fill that gap at all or touch that gap, then we're off to the races. Do I care about 750 right now? No. And the reason I don't care about 750 is because I don't want to trade this hype train. And yes, earnings are hype trains. If you're not in before earnings, my rule is 3 days. And if you wait 3 days, usually you're rewarded. Now, if we go over to Seeking Alpha and we look at NVIDIA, and what I want to do is really do the PE and chart the PE so that you can see in this one, and I hope that they have it updated with the current PE, but let's select metrics and we will go down to valuation and we'll do the PE gap right here. And what we want to do is we want to look at the PE. I don't care about price return. We don't care about price return. We just care about PE. And we will do let's do a 1 month. Just became cheaper. Just became cheaper, okay? We went down from a 60 to a 56. The stock just became cheaper. So do I care about buying this at 758 when I think it might go down to 720? No. Because if it runs to 780, then that's the equivalent of buying it at 720 before the earnings. Understand it just became cheaper and they guided higher. So I'm not chasing this one into this print. You can see the MACD is down here. It probably will come back here. I'm not chasing it. I own a portion of this. If you're not in this, how do you get into this? You just buy. Just buy. Today, buy it at 758. Just buy it. Forget about it. This isn't a stock that you don't want to have in your portfolio. If you have the Qs, you're in it. If you have an ETF, you're most likely in it. Understand what your exposure to this stock is because you want to have exposure to this stock. That's the one you want. Now, SMCI. SMCI yesterday announced a $1.5 billion offering. This is similar to what they did in December where they diluted shareholders. This is a bond. So they are offering convertible senior notes, which are bonds, at $1.5 billion. This, the company expects to use a portion of net proceeds, the offering, to fund cost of entering into the capped sell transaction, intends to use the remainder of the net proceeds from the offering for general corporate purposes, including funding work, capital for growth, and business expansion. That is 100% word for word what SMCI said in December, on December 1st. Well, let's go see what happened to this stock from December 1st up until today. Because if we just track from December 1st, we go back here. Look at how it, December 1st, you lost some. You went down, about 10% on that one? You went down? Yeah. This one from December 1st to today, you're up 212%. Don't pay attention to that. Yes, it's 1.5 billion. Yes, they are putting their money to work. This is a capital intensive business. I said yesterday, I am out of this one. I'm not out in my brokerage, but I'm playing with house money because I made so much money. I sold at around 850. It's now at 861. Am I buying into this? No. This gap, same thing. Play it around NVIDIA. This will follow NVIDIA. I think we have this one come back down here to about 800. I will buy it at 800. No longer am I looking for this to enter into $600 territory. It's not overvalued. I repeat, it's not overvalued. SMCI did not reduce their value, their PE, just because NVIDIA decreased their PE. But SMCI, as long as NVIDIA says the price for these chips continues to go up and we're just at the beginning of the AI train, SMCI is at the beginning of installing that train. And so understand their business, understand where they are. This is Super Micro falls 10%. This article, I'll include it in the newsletter. It is fantastic. It outlines exactly what this demand is, how they're installing these racks, how they do it. Rosenblatt, the firm moved the price target to 1,300 from 700. So SMCI, 100%. If we go over to the Wall Street ratings and we look at this one, and we look at this, this has, the average price target is 722. That does not include today's $1,300 price target. The high, I guess it does, 1,300. 722 is where you want to buy this one. It is at 856. You don't want to wait for this to get to 722. I think we're going to have a chance to buy this with a 7 handle. If you're not in this, understand, just go out and buy it today. Just go out and buy it today. If you are in this, I would wait to add to your position. Wait 3 days. You don't have any problem waiting 3 days. Again, if it's $900, great. I had plenty of people commenting on an article on Seeking Alpha where they said it's never going back to 1,000. FYI, it's going back to 1,000. It's going back to 1,000. So buying at 863, not a problem. If you pull back 20%, so you lost 20% in the short term. Who cares? Add to it when it pulls back 20%. This one is not expensive. Understand, I don't think it's expensive. The Seeking Alpha analysts, these guys are dividend holders. F those guys. You're not going to make dividends on this one. This one, they're spending money to make money. So I like that. I like that a lot. BLDR. If you were on Savvy Trader, then you got my notice. And let's go back over to Savvy Trader so I can show you. If you are a paying member of Savvy Trader, you got the notice that I bought BLDR. And I will make this completely available on Facebook. You don't have to pay for it. You just get later. I try and protect this stuff, but you do get notification, and I put the notification out there. Here's what I said before earnings. I said I was going to buy this yesterday on my podcast. I bought it at 183.85. I like the setup going into tomorrow's earnings. If it doesn't perform well, I will simply hold this stock. The PE is not crazy. Expectations aren't high. I completely expect this to continue its climb as home builders have been doing really, really well. Well, let's look at BLDR because BLDR blew away their earnings. Again, the expectation was low. It was they're trading at 191. It's up 4.31%. So I'm up, let me see. I'll look at it for you live right now because we'll just look at my BLDR exposure. I did put in, I bought 60 shares, 70 shares. So for me, average exposure, nothing crazy. For other people, that would be an enormous buy. So this is why you never listen to a douche on the internet because our situations are completely different. Total gain, 5%, 5.1%. Simple, 5% in a day. I'd take that. I'd take that in a heartbeat. 5% in a day. I'm going to hold on to it. I think it'll be okay. I think we'll be fine. So we're all there. BLDR, perfectly fine. SMCI, perfectly fine. But yeah, if you wanted to subscribe to my trading portfolio on Savvy Trader, I think I'll probably gain. Yeah, I'm down 6% week to date. 1 month, I'm up 20%. 3 months, 41%. Year to date, I'm up 34%. I'm beating, let's see. We'll go year to date and let's see how I'm doing against the Qs because the Qs are the best in my mind. The best. I'm up 34%. The Qs are up 4%. I'm blowing it away. So, but I'll include this article about Builder's First Source. It's just honestly, somebody brought this up, I think last week or 2 weeks ago, and I said, it doesn't get me excited. I'm now excited about it. I am now excited about this one. I think the valuation is strong. I don't have a ton of exposure to like Home Depot, to home builders. I am getting into home builders because I do like the home builder situation. So Supermicro is a good one. We went over that one. Biggest stock movers of the day. There's a couple of other ones. DigitalOcean surged 15% after provider on-demand infrastructure platform tools for developers. That's a good stock to have. I have no exposure to it. Let's go over some of the losers. There's two big losers, and it's Lucid, LCID. This one, it plunged more than 8%. It's down 9%. As the company missed the top line expectations with a 39% year-over-year decline. Lucid's CFO and principal accounting officer remains optimistic. I do not. If you are in this stock, understand, Lucid is a company that they're not making money. They have $100,000 vehicles. It is a specific market that buys this. They were trying the Tesla model, but they weren't first to market. The problem is Tesla did EVs when nobody else was doing EVs. Well, these guys are creating $100,000 vehicles while trying to expand their plants, expand stuff. They're just not delivering cars. And so they're losing $2 billion. They have plenty of cash on hand. You're not going to get diluted this year. You probably will get diluted sometime next year. The only chance that this has if the Saudi sovereign fund winds up buying them and taking them private. That's the only chance that you have of getting your money back. In fact, no, there's NEO is the one that they asked about. But Lucid, if you're in this, I would take this opportunity where it bounced a little bit. Right now, let's see where you're trading at. Right now, Lucid is, let's see the chart. Lucid, it's a losing company. There is no way, and we'll go into the next one, which is Rivian. But Lucid, there's no way you're getting back to this gap up here at $8. The only way you're getting back there is if Saudis take it private. It's losing money. It's not like they're going to suddenly announce, oh, we created 1 million cars and we were able to produce that. No, this is a capital-intensive business where the demand is actually falling off. You're down 10% right now. Horrible, horrible stock. So don't think that you're going to get into it. Rivian, absolutely a disaster of a quarter. Significant EBITDA loss, $2.7 billion. Anticipates 57,000 vehicles in 2024, representing a modest increase. They were kind by saying a modest increase. It was like 56,900 something that they produced in 2023. They're not growing. So when you go over here to FinViz, and I'm using FinViz so that the people who don't have Seeking Alpha Premium can all look at this for free. They're not making money. They're losing $5 billion. Cash on hand, $9.55. They've got plenty of cash on hand. They will not dilute you. They just did a bond offering, I think, about 3 months ago or so. If you're holding on to this because I said it was a $30 stock, get rid of it. Just get rid of it. There's 2 reasons to hold on to Rivian. First thing is you do think that it's going to come back in the long term. This is not something that's going to hit $30 this year. That was how bad this quarter was. That was how bad they guided. At the end of last year, they were still guiding to almost double their production in 2024. That no longer is the case. It's a change in news. Remember how I got out of Sedge because they said there was no demand and there was no chance of it getting back to 300? Don't water your weeds. Get out of your losers. This is one you just get out of unless you want to hold on to it for the long term. And if you want to hold on to it for the long term, that's up to you. In my mind, I'd rather wait, buy it back when it gets back to 16 for maybe a run up to 20 or 24 before you get to 30. I do think that this one just changed. That's how bad this quarter was. Things changed during this quarter. And it wasn't a change for the good. They will announce the R2, which is their pickup truck. Their low cost, I think it's going to be about $50,000. That's going to be their low cost. Here's the problem with it. It's being produced here in Georgia. Here's the issue. The plant hasn't even started production or building yet. It's not even, they haven't started production of the car. They haven't even built the plant yet. So that announcement in March about the R2, it's all going to be hype. And is it going to come out to be hype? Maybe. But here's the thing. There's 3 main vehicles that these guys produce. There's the R1. There's some other SUV kind of thing. And then there's the Amazon delivery vehicle. And Amazon had an exclusive deal with them. And then they told Rivian, well, you can sell it to other delivery companies. The problem is they haven't been able to produce them fast enough. So they haven't been able to produce them fast enough. So they're finally just delivering the Amazon needs. Amazon has said, you know what? We may cut back on our actual needs because Amazon's looking to actually cut their costs. So they're saying, hey, maybe we don't want all of our eggs in one basket with just Rivian. Maybe we'll go out there and get other EV companies to make it, because Rivian hasn't been shown that they can produce their capacity to actually produce vehicles. Get out of it. That would be my idea, is just get out of it. There is no reason to hold this one. We're in a bull market for anything that looks like this during this year. And look at that chart. If we go over here, I'm going to draw on this one because I can draw on the TrendSpider one. But for anything that looks like this during this year, remember, we're up, my Savvy Trader portfolio is up like 24% year to date. If your chart of your company from January 1st looks like this, get out. Because again, get out. This is where it actually looks like. It's down 23%. Just get out. If you want to trade this one from here, my suggestion would be wait for a bottom, wait for some type of confirmation, and then trade it. If you can't stand to take the loss, then just trade it. But like Warren Buffett and Peter Lynch said, don't water your weeds. Get your portfolio down to where it's actually in stocks that are making money. That's what you want to do. You don't want to have 50, 60, 70 stocks in your portfolio. You maybe want to have 10 or 15. I've got a lot. And part of the reason I have a lot is because I have a lot of ETFs. But I've also got those Magnificent Seven. And I don't have a significant position in something like a Rivian. It's smaller. And if I forget, DocuSign's a perfect example. It's gotten, I had 100 shares, $6,000. I've completely forgotten about it. It's just a bad situation to be in. And a stock like this should not be your main core position. So that covers the earnings from yesterday. I think that's a good, Etsy. I still own Etsy. Why I own Etsy, I don't know. Again, my thesis is changing on Etsy. I love the brand. I really love the brand. I think I went over this yesterday. The brand is when I have to buy birthday gifts for somebody and I don't necessarily know what to get them, I find out what they like and then I go to Etsy and type it in. It's a fantastic website. You can buy somebody a street sign for like $10, with their name on it for their birthday, for something like that to hang up in their garage. Little gifts like that just have this personalization. And no other place on the internet does it as well as Etsy. It's a fantastic brand. It's a fantastic company. I just think they're getting killed. They can't get out of their own way. This one, the mixed Q4 results and weak Q1 guidance. The online marketplace anticipates a low to mid-single digit percentage decrease in growth merchandise sales, attributed a decline to weakened demand for handcrafted goods and personalized gifts. I like it. You know where I'm going to take this money? I'm going to sell out of Etsy. I'm going to put it into Shopify. Those are the two companies that I think do small business really, really well. It's clear. If I were just to compare, you know what? Let's go over here because I'm going to take Etsy and I'm going to show you how to value two businesses that in my mind, they're not exactly the same, but they're very similar in the fact that they allow small businesses to get on the internet. And if we go over here to charting, I've got a pretty good position in Etsy. I have a bigger position in Shopify, thankfully. But there you go. 1 year. Look at Shopify, 82%. Look at Etsy, down 38%. If I took, even if I took like Rivian and Lucid versus a Tesla, let's do that. Let's do that. Let's do Tesla, and we'll do Rivian and Lucid. I think those are going to be good. LCID. You know what? We'll put Ford in here as well. We'll put Ford and GM. Why not? We'll do the car companies because if you're enamored with car companies, let's look at what's done over the past year. GM down 3%. Ford down 49%, Lucid down 66%, Rivian down 20%, Tesla down 1%. Doesn't make sense to be in cars. Doesn't make sense to be in a capital-intensive business right now. Again, higher for longer. Consumer is getting stretched on these high beta goods. So that's kind of how you have to look at things. Now, I saw this list. This is the top 10 worst performing stocks of 2024 so far. Do we see anything in here that looks interesting? First off, I own Intel. I think Intel's probably a good one. I think that one gets back to 50. Lululemon, I think that's a good company. I think you get back to 400. Warner Brothers, they got kind of a problem. Baker Hughes, I have no idea what they do. Sirius XM down 14%. It's a dying business. Why does anybody pay for Sirius? I have no idea. Spotify is so freaking good. Biogen, whatever. Team, that's not a bad company. Walgreen Boots just got taken out of the Dow. Tesla, number 2. Number 1 is Charter. Who's buying your, you're getting internet service. But with wireless internet service becoming so good, with Starlink and T-Mobile offering home service, why would you, again, Charter doesn't have the $80 a month thing that you can put in there. I think this offers opportunities. The two that I really like are number 10 and number 9. I think Intel is coming back. That's a rebound story. I think Lululemon is the only reason it's down 13% is because the valuation is stretched. But it's still, when you go into the mall, there's 2 stores, Lululemon and Apple, that are just out of control, like huge. Now, 2 earnings that are coming up today. I am not playing either one of these. Understand, I'm not playing either one of these. I don't want to get into these. I don't know them really well. Well, there's 3. I don't know them really well. I already own one, but here's the 3 earnings that I see today that are going to move the market into it. This is TurboTax. It's a buy from Wall Street. If we go and look at Wall Street from a buy perspective, the average target price is 641. You're trading at 653. You have a 1% downside. I mean, look at how it trades exactly to its price target. So I wouldn't take the chance on this one. If you want to, you can, but not my thing. Meli. This is the Mercado Libre. This is the Amazon of Brazil. 5% upside. The average price target is 1880. You're trading at 1783. It's a hold in the quant. The valuation is the only thing. Valuation is extended. Look at how it trades to its target price, though. I mean, it's come right back up to it. If you get to your price target, you have a nice 5% uptick. So will they present some strong stuff? I don't know. That, to me, presents quite an opportunity. Square is the other one. I had an initial big position in Square. I no longer do. Average price target is 81. It's trading right now at 67. So you have a 21% upside. With that price target going down like that, I don't want to invest in it. I probably will get out of this if they declare some type of crazy bad earnings. This is like PayPal. I mean, this will either lift PayPal or it will lift Square, or it's just the death sign. I mean, there's not a whole hell of a lot of expectations for this one. So it's lower expectations. Cash App attracts customers. I like Cash App, but social requests. Dendrobium Queen. TCLNX. What the hell is TCLNX? Life cycle. Oh, it's a target date fund. Yeah, get out. There's no reason. I mean, here, let's just chart this. Select symbol. We'll just go QQQ and VOO. I mean, why are you in a target date fund when you can, manage it yourself and pay a lower fee? Why would you be in this? I mean, look at TCLNX up 10% over 1 year. You look at 3, it's a target date fund and it's targeted 2030. And so you're 4 years away? This is going to be super, super conservative. So you're not going to make money in this one. You look at a 10-year, it's up 9%. Look at the lost 10 years. QQQ has made 371%. TCLNX, understand, target date funds for me do not work. They may work for other people because it depends on you. And IEF Treasury bonds, Dendrum Queen, I am not a fan of bonds. I think bonds just are a way for you to get income, not necessarily an investment. They're a way for you to make money when you're older if you need income. But as a young person, you don't want bonds. And this target date fund, I just got my friend Kristen out of these target date funds. They're junk. They're absolute junk. As you get older in 2030, what the 2030 fund retirement We can look at the holdings. Here, yeah, it's holding bonds. I mean, it's 20% bonds. You don't want this stuff. You don't want any of this. Understand what you have your investment in. If you are in a retirement, like a 401k that restricts you, find your S&P tracking fund. Find your NASDAQ index tracking fund. Get into those. They're always there. The S&P is probably, my 401k was on when I was at Earthlink. They only had an S&P tracking fund that didn't have a QQQ tracking fund. I said, what the hell are we doing in this? I want my money back. And they wouldn't give me my money back. So, Lou Dog. Hi, Gary. I've been hanging on to NEO since 2020. Will it ever get back to 14? I don't even have to look at the chart. No, it won't. We can go and look at NEO. It's got a hold buy. Here's the thing. It's a Chinese car company. Profitability F, momentum D. They're expanding into Europe. If you want, go and look at the battery swapping that NEO has. It's kind of cool to watch. It's a subscription service. So you subscribe and you kind of rent the battery. That's the model of this car company. I don't think it's getting back to 20. The hype that you've seen where it's gone up over the years has always been, well, the Chinese government has given them a low-cost loan. They're propping them up. It's a Chinese company. Don't get into it. I'd say get out. It's not going to get back to 14, Lou Dog. If we go over here and we look at the Wall Street analysts, let's see. The price target, it's got a 77% upside. But look, that's a price target that's just slipping. The price target isn't even at 14. The high is 17. But I can't imagine it even gets back close to there. Look at this long one. Again, watering your weeds. Why are you watering your weeds? Don't dollar cost average into a losing stock. Dollar cost average into a winning stock. There's so many good things out there today. And so to be in these names where it's not, it's not doing anything, get out. Get out. By the way, I do want to speak to this. There are severe disruptions on the mobile phones, AT&T, Verizon, T-Mobile. Severe disruptions causing all kinds of problems. AT&T crossed up on the algorithm today. I don't think that this is a long-term buy. I think this might be a decent trade. But again, watering your weeds. Understand the stocks that you're in. I won't go over the scans today. The reason is there's some energy names in there. The stocks that I went over today, NVIDIA, Tech, the Grade 8, all of that stuff, Uber, under 80. It's up 3% today at 79.22. Get it under 80. Palantir, up 3%. It's at 23.99. You could buy that. It's going to be included in the S&P. I do think you'll get a chance to get it under 20. But if it's included in the S&P before it gets back down to 20, just hold it. Apple, I think, is your best opportunity. I do think that Apple in the long run, I think you just load into Apple. There was a news story on this one about Apple iPhone tops U.S. smartphone sales despite January slump. Apple's ecosystem is going to get bigger. I think that's one that you just buy into. Amazon, it's back over 170. Did you get it under 170? Boeing, good company. It's a 203. It's going to be a $220 stock. Cleveland Cliffs is under 20. You can buy it under 20. It's perfectly fine. Costco, $7.29. They're going to have a membership increase at some point. Google at $145. It's under $150. I think that one is the most susceptible because they may lose some very valuable search revenue, but it's fine. Eli Lilly at $763. Just get into it. Meta at $482. I think that's a $500 stock. I think they continue to print money. MPLX is close to 40 with a 9% dividend. I think you're fine in that one. Microsoft. Did you get it under 400 the other day? Because it's at 410 right now. Netflix is a $700 stock. Get into it. NVIDIA down at 771. This was trading at 780 earlier today. If you don't want to buy that at 770 and just hope that, at some day it goes up to the price target of 800, 900, 1,000, whatever you want, get into it. Oxy, it's over 60. If you want to sell it, go and sell it. PanW at 266. This one got hammered yesterday. It's up 1.8%. I hold on to this for 3 days post earnings, and then I'm buying more. I shouldn't say post earnings. What I'm going to buy more of, because I already have a position in PanW. I don't necessarily believe the CEO when he says there's no demand issue, But CrowdStrike's what I want to get into. CrowdStrike's up 3%. I should have bought it under 300. Their earnings are coming up. I think they blow it away. In the newsletter yesterday, I included Brad Freeman, who's the stock market nerd, his explanation of how Palo Alto Networks probably benefits CrowdStrike. But understand, CrowdStrike's not making money. It's definitely a risk. Let's see. Roblox at 41.27. I don't know if it dips under 40, but if you want to buy it, I think it's a $44 stock. A good market. Tesla, I am bullish Tesla. Let me just say, I bought a Tesla yesterday. That buying process was unbelievable. Unbelievable. So let me go through kind of how you use something in your head about a product that you buy and products that you use. So first thing I did was go to Tesla. Told my girlfriend, I'm not going to buy it today. No, I wound up buying it. It was such a good deal. And yes, it's money out of my pocket. And yes, it cost me money. But I needed a new car. I just didn't feel comfortable in a 6-year-old Tesla. So I wanted to get a newer one. Wound up getting it. I'll pick it up tomorrow. Fantastic deal. The actual buying process has been so refined at Tesla. It is unbelievable. There's no negotiating. So you go in there. They tell you what your car is going to trade in. They tell you before. It's all electronically done. The salesperson has nothing that they can do. There's nothing that they can go back with and say, let me talk to my manager. Those days are over. If you've got a car where you're going in and negotiating, that's yesterday. Today, it's all about algorithms. It's all about electronics, and they do that. So here's what happened. They offered me $17,000 for my Model 3. I said, that's a little low considering you offered me $20,000 in January. And he said, yeah, things have changed. We have more cars on the lot, so we're able to offer a discount. So the money probably came off the price of the car. And it made sense. They're keeping the price of the car about the same, but they're offering less on the trade-in. Kind of makes sense as the car business. Again, Tesla's growing as a car business, and their algorithm says that. And I wanted to transfer my full self-driving from my current car to my new car. I thought I had to trade it in to do that. He said, no, you just need to hold on to that car for 2 days. Once the full self-driving is transferred over, you get it. You can sell your car completely. So what did I do? I went to Carvana. I'm not a fan of Carvana, and here's the difference in the two. Carvana offered me $22,000 for my car. Tesla offered me $17,000. Carvana is offering me $22,000. I do think Carvana can probably sell the car for $25,000. I think that's out there. So I don't know what Carvana's business model is, 22 versus 17. I'd rather invest in the business that's going to try and sell it buy it at 17 and sell it for 25, or they might sell it to, I think Tesla probably would turn around and sell it to Carvana for 22. So they'd make money at that. That's the business that I want to be in. That's why I think Tesla is probably going to turn things around, but I don't want to buy in here. I don't want to buy in here. And the reason is it's still expensive. And the new car, so I've got a lot of little stuff in here. I got to buy HomeLink, which is the garage door opener stuff, $350. I got to pay $100 a year for connectivity. I've got a lot of I don't have Summon because it no longer has the radar stuff on it. It only does everything by vision. There's a lot of trade-offs that I've got to do. So I'm a little bit nervous about buying Tesla here. The valuation is extended. And Elon is an absolute mess. So, but that's my story about Tesla. If you guys are in the Atlanta area and want to buy a Tesla, go to the Greenbrier, I think it's Marietta location. Ask for Seth and tell him Gary sent you. He is fantastic. Just the buying experience, I can't tout it enough. It was I walked in there fully expecting not to buy a car. I was just going to test drive. I was going to go home and to look at some things. I'm not the type of guy to walk in there. They made me the type of guy to walk in there and buy a car. Simple as that. So in my mind, I think that the company's a good company. I think they just have to get their stuff out right. I don't trust this car company right now with Rivian coming in with those horrible deliveries, with NIO coming in with those horrible deliveries, with GM and Ford saying they're cutting back on EVs, with the production so high with Tesla, with all of these new factories and all of these new cars. with the production so high, I don't trust that they're actually going to sell out of these vehicles without cutting the price. And yes, I may lose money on this car. They may cut the price to, 2 weeks from now. It may be a $5,000 price cut. It is what it is. You lose that money driving off the lot anyway. But I'm willing to take it. I'm willing to, I love the car. I'm not going to any other car maker. Honest to God, I'm just not going to any other car maker. So there's my story. NVIDIA today. Hopefully you guys got it. I will be back tomorrow. The paid newsletter, by the way, if you want to subscribe to the newsletter, it's free. dailystockpick.substack.com. It's 100% free. This is exactly, what I said yesterday was Tom Lee said that I'm not seeing much support in the short term for SMCI. This week's paid newsletter had quite a deep dive. I still look back. I took at $850 on Friday, so I'm playing with the house money right now. Let's see. That was 220. Let's go back 221. This is yesterday's. And so that was 2 days ago, and it was right. There wasn't much support. I don't think you need to rush into NVIDIA just because of earnings. Yes, it will point the market in the direction, but it's clear from the last two earnings, which were both blowouts, that you can get in even after earnings. This is it. I mean, this is free. SMCI looks weak, so I'm looking for a 6 handle to buy this stock again. A blowout by NVIDIA might not make that happen, but a settling of the stock is in order. The algo doesn't have you out, but it hasn't moved far enough for me to get excited. And if we look at SMCI, it's that exact thing. SMCI, it just hasn't moved enough for me to get excited. You're still in this downward trend. The algorithm is smarter than I am. I tried to time this algorithm. Wrong. My algorithm is better. If you want access to the algorithm, over here, you go to Linktree, linktr.ee /daily stock pick. It's right down below in the video. This is TrendSpider. You get 25% off. You go over here. It's $8.92. I think you can put in I think you get 50% off. So it's 50% off, not 25. $8.92 for a year. For a year. If you're say you put $20,000 into NVIDIA based on or into SMCI. Let's do SMCI, and you put $20,000 into SMCI. Okay, just with the algorithm, and you're not out. Yes, you're not at the high, but you're not out. That's 178%. So let's see. What's 10,000 times 178%? Oh, 17,800. So $10,000, you just made $17,800. Boy, that $800 you spent on TrendSpider doesn't look that big to me. This is the opportunity. And it's not just SMCI. This does it for all the stocks. So you can just, with my scanners, you can find these stocks. That's how I found SMCI. Somebody had recommended it to me. I looked at it. I said, the algorithm does really well on this, and it protects me against the downside. Well, the downside, it protected me against getting out on the downside, but my ass put emotion into this stock trade, and I got out. Wrong. How's it do on NVIDIA? Let's see. Did it get you out of NVIDIA? I think it may have gotten you out of NVIDIA. But again, it protects you. You never look profits as a downside, even though you missed some of the upside because you got out too soon. As long as you took profits, be proud. I've taken 1% profit before, and then the stock moved up 10%. The next day. Yeah, look, it didn't get you out in NVIDIA. You're still in at 515. You're still in at 515. So, you got to look at it as, hey, this opportunity, let's see, you're in and you're up here. You're up 50% in this big of a company that's overvalued according to the On the Tape podcast, guys. So I think TrendSpider, again, you don't look at it as, oh my God, I got to spend 182. Look at it how much money you're making or how much money you're saving in a bear market. That's the key when it does get you out during the bear market. So again, subscribe to the newsletter, subscribe to TrendSpider. The other thing that you want to do is Seeking Alpha Premium. Seeking Alpha Premium, you get all of these charts like I showed you. Even going to Wall Street, here on Apple, let's just go to Wall Street and we can see Wall Street's target is $200. That's a 10% upside on Apple. How does it trade compared to its target price? Well, when it's down this far, it typically just goes back up. Now, we talked about those reducing price targets. Look at this over 5 years. You haven't had one where it reduced. It reduced here in 2022 down to 168. Boy, don't you wish you bought it at 168 down there a couple of years ago? Because you're up. Yeah, I mean, that's the issue. Again, seeking alpha premium gives you access to all of this. The other thing it gives you access to is if you don't know about a stock, you can read these analysis. And these guys are qualified. It goes through editors. I can tell you, I am not one that has even tried to publish here because I don't know as much as these guys do. So they're experts on these stocks. You can read them. You can argue with them. I was arguing or debating, whichever one you want to do, about SMCI because all of the dividend and the Walters with the, in their rocking chairs in the old age home were saying it's overvalued. You don't want to get into this. Well, yeah, F you. It's going back to 1,000. So I was right. You were wrong. Let me do a happy dance. F off. Yeah, I'm not yelling at old people in homes. Let me make that perfectly. I'm not walking into an assisted living facility and yelling at old people that they don't know what they're talking about when they invest in bonds. Everybody's different. So I'll be back tomorrow. You guys enjoy your day. Hopefully you're up. Let's do an indices check because you want to take your portfolio and look at how you're doing against the indices. Because if you're not beating the indices, you've got to reevaluate your portfolio. It is a simple formula. You want to beat these things because there are too many ETFs out there that you can buy with no low cost expenses. So the Dow is up 0.69. The NASDAQ is up 2.37. S&P is up 1.56. I try and track to the NASDAQ. I am not doing as well. I am up 1.38%. I have too much freaking cash. That's essentially what it is. I have too much cash. I don't have enough invested. That's what it tells me. But I am 1.36. I'm not beating the Dow either. I am underperforming. And my guess, just my guess, is it's because of Apple. Yep. Apple's only up 0.48%. And on a day like today, if this stock isn't taking off, it's button hooking here. You're probably going to get an entry here in the next buy it at 183. I'm telling you, it's bouncing off that 180 level 3 times. Let's see, 1, 2, 3, 4 times. 4 times in the last month, it's bounced off that 180 level. Clearly putting in a bottom at that 180. Could it go down to 160? Absolutely. You just load up on it more. So I'm underperforming in this name. I do think that the top is probably 200. So, just make sure you're evaluating it correctly. I'm still bullish on this one. Okay, I've gone on enough. Remember, Linktree has all the links. Sign up for stuff. Oh, and if you make money off of stuff, just consider. I'm like a bartender. Gift me with Venmo, PayPal, Cash App. They're all down here. And maybe, if you're generous enough with the tip, then, you could go balls deep and I could do a full episode, commercial free, just in your honor. So, okay. Take care, guys. Say bye. Let's see. Bezos selling so much. Check it out. I am going to check out TrendSpider, that thing. Morning, Brandon. Rivian down 22%. What do you think about Carvana? Varun. I just went over it a little bit. My experience with Carvana. They're still not making money. I wonder if they get my car for $22,000, they then have taxes and fees and things like that sort in order to sell it. I wonder how much money they're making. Because I don't know. Let's see. Carvana.com. Let's go and see if we can look at a 2018 Model 3. Tesla Model 3. Let's see. What's it selling for? So, 2018 Model 3. Long range. They are selling it for like $30,000. So $22,000 for $30,000 if they get it. I think they'd probably get about $25,000. My car is pristine. Pristine. They didn't have a mid-range in 2018. So this is my problem. They didn't have a mid-range in 2018. I mean, when you log on to this and you know enough about Teslas and you know that they didn't have 2018s, I mean, this is just a lot of freaking Teslas, by the way. So I'm happy they're giving me 22,000, but they're going to sell it for at least 23 to 25. I don't think it's a bad business. It's a labor and capital intensive business. So I'm not a super fan of it. You can see the stock. The algorithm makes you 4% versus losing 58%. It's had these nice up and downs in the stock. If we go and we look at it here, CVNA, it's a hold across the board, and it's valuation, growth, profitability, momentum. And we look at Wall Street. Average target price is $40. He's trading at 51. And that's because, by the way, Carvana is still shorted. If we look at Carvana, it's 35% of its float is shorted. So it could have another short squeeze. They're losing $242 million. They have, $8.66. They have about $800 million of cash on hand. So they're not going bankrupt. I just question the model. When you've got this many Teslas on the website and you've got this many cars, and people necessarily, how much are they actually selling for profit? Wow. 32,000. Oh, it's only got 17,000 miles on it. Yeah, they'll sell my car for about 25. Yeah, I'm up at 57,000 miles. So they'll sell my car for about 25. I was right, about $25,000, I think, with the 19-inch wheels. Yeah. So it's not a horrible business model, but, it's... I just question this mid-range. I don't know what a mid-range, why you would list it. Let me see. Mid-range. Price drop. They dropped it by $400 reduction. They don't say anything about the range. I guess it's got some scuff marks on it. But let's see. Key features. Oh. Yeah. Definitely doesn't look as good as my car does, but I'm not a fan of Carvana. Long story short, I would not buy the stock. What the hell's going on? There we go. Let me get out of that website. God, when your website is effed up. Morning, when you have a moment, could you provide your thoughts on CR Crane Company? BC Tree Climber. CR Crane Company. What do they do? It is an industrial, which are doing crazy good. Manufactures, sells engineered products in Americas and Europe. The company has 3 segments: aerospace. Looks like it's a buy from Wall Street. Stock price looks good. Growth is D-. So you got 3% upside from the target price. Nothing about this gets me excited, but that growth, I mean, look at that. Minus 49%. I mean, year over year revenue growth, F. I mean, it doesn't look good, BC Tree Climber. I mean, everything points to why is it up? Why is the stock doing that great? Now, profitability, they have a 38% margin. Sector median is 30%, so they're doing really well. Momentum, this is probably PEG and stuff like that. 3 months performance, 12%. 40%. So they're doing much better than most others. But the valuation and the growth is what would hold me away from this. So Industrials have been doing really well. And if we chart this, select, no, we're going to do select symbols. We'll chart this against XLI, because if you're beating XLI, if you're beating your sector, then you're doing well. Yeah, look, over 1 year, CR is up 67%, XLI up 17%. Year to date, it's beating it slightly, 6 months. It's beating it by a large margin, 5 days. Let's see. Yeah, it's kind of been doing the same thing. So I think over 1 year they're doing well, but the growth and stuff like that would scare me. And again, I don't know anything about the company, so it's hard. Options available on Lunar. What's Lunar doing? Let's see what Lunar is. Lunar's down. Lunar down. Lunar down. I mean, why would you want to invest in Crane Company when you can invest in Lunar? Up 251% year to date. Year to date. Ah, thanks, Bell Ringer. In fact, they're calling me a bunch. Let me see. Oh, it's an automated call. Use your Tesla app to get the delivery. Okay. I have 16 text. Okay. Let's see. NVIDIA over Carvana, absolutely. Varun, if you gave me an either or, NVIDIA. Peter, if you signed up for TrendSpider, just go over here. Here, I'll just email me. Now I'm going to get all kinds of spam. But just email me from the email that you signed up with, Peter. And I'll send you the welcome letter. I just got to put you under my plan. I don't know if I got... Let me see. I don't think I got you under my plan. But we'll move. I'll have them move you under. Just email me. Okay, I am out of here. It's now 10:30. I got to go put this all together. I will be back tomorrow. Congratulations to everybody who's doing so well. I'm doing fine. I am underperforming, but I'm not upset. So, okay. Take care.